the stocks on the editor's radar then, and today we're putting the spotlight on the hospitality space. We'll also be talking about FMCG. Begin then with Indian hotels and just the trend in general, because monsoon season as well is looking pretty promising for a lot of these hotels, and Q2 is generally weak.
So I'm picking up what we've got from Oyo Rooms in terms of forward guidance. They've said that the holiday season or the summer season has not been bad for them. But will that really apply well for the entire hotel industry per se? This is a tricky time now for the hotel industry. One side there's this excitement and belief that the growth in some of the hotel stocks would only be linear and things will only migrate higher. But where we are getting a sense of a bit of a churn and a bit of a slowdown is that the business travel purely in terms of affordability could really be in challenge. The quarter gone by, I think would be an interesting quarter for some of the hotel stocks, largely because of the valuations they are at. You know, Indian hotel now is at 380, touched 400 rupees. Lemon Tree in last 1 year is up 40-45%. The forward P multiple for Indian hotel is 25 times, Lemon Tree 18 times, Chalet Hotel 18 times. These are not very cheap P multiples.
Yeah. And so they've already run up.
They've already run up. So you have to really understand that while the big picture from a 2 to 3 year time frame is great for hotel industry, is going to be more demand and more demand and more demand and very little supply. More demand, little supply. But our market's pricing that in at these valuations. And little bit of miss here and there, these stocks could actually get into time-wise and price-wise correction. So while Oyo Room is indicating that things are looking okay, but I think from a market standpoint, the quarter gone by I think would be an interesting one. So let's see how this entire space moves. I get a sense that maybe the linear move in some of the hotel stocks is clearly behind us.
Okay, that's the view coming in on hospitality. Let's move on then and talk about Marico and Godrej Consumer. A lot of these companies have come out as well with their Q1 updates, and the underlying factor that they're alluding to is that it has been single-digit growth.
Yeah, this company is in a spot of bother, and I think it is getting evident. I mean, the idea that they are a very focused and a very concentrated company both in terms of oats and oil and in terms of the Parachute brand, but the volume growth I think is now on the lower end.
And rural
isn't picking up. But the Marico commentary versus the Godrej commentary, I think there seems to be a contrast here. So I think we are headed towards a quarter for the FMCG companies where not everything will do well, but not everything will do poorly. The contrasting numbers I think would be at play when it comes to the entire FMCG sector per se. There was a time when if HUL is doing well, others will also do well. I think it's a very differentiated kind of a quarter now. We've got two quarterly numbers, one from Godrej and one from Marico. Marico numbers don't inspire too much of confidence. Godrej Consumer inspire a lot of confidence. I think Marico has done nothing, if you frankly ask me, in last 1 year. And there's reason to believe that the underperformance will continue. Godrej, I think, is an interesting one, largely because change of guard, volume growth coming back, and palm oil prices have come down for them. That, I think, is the biggest hurrah for a company like Godrej Consumer.
Okay, so there you have it. Godrej Consumer is likely to take the lead as compared to Marico.